There we go. There we go. I think I got it. Clicked it like 3 times. It would not go live. Hey, everybody. I got a little gravel going here this morning. Welcome, everybody. Diana, Steve, Steven, Rob, Arturo, Tiger. That's Darren. Sledge, Laura, Cliff, Svenborn, Mary, Ralph, Kimberly, my favorite subscriber. Wrongamer, how you doing, buddy? And Ted, Ryan. Morning, everybody. One of you sent me this awesome. So I got another Cybertruck. Looks like it's a Lego type thing. I guess knockoff Legos. About 1,500 pieces that'll keep me busy for a day or two, and goes along with my little Johnny 5 robot got sitting here. We got Lego. I got a Lego Lotus. It's green, so it looks clear. And let's see what else I got sitting here. Still working on these D11 bulldozer. So yeah, this is this is all in my studio. So I do work on things here. Morning. So anyway, I do appreciate that. I thought I'd show it off. So got me yet another Cybertruck. So that's cool, right? There you go. Thank you for sending that to me. I appreciate it. That's something I'll do in the background here. That was from one of y'all, so I thank you very much. I'm not gonna point anybody out, but yeah. And my mailing address is listed in the Termite Trading Lab chat if anybody ever wants to send me anything. I've gotten some cool stuff in the past. I did, I guess last year, somebody sent me the Cybertruck Christmas card. I keep that on my desk here, so that was pretty cool. And it actually popped out. It has a 3D pop out Cybertruck, so that was cool. I do appreciate anything anybody sends me. So, and thank you all. Thank you for your support. Thank you for being channel members. That's the only thing I really, if you want to support me, that's the only thing you really need to do is just be a channel member. That's awesome. So I try to give you extra content and stuff like that too. So thank you for, my family. Thanks you. I thank you. It's, I do this YouTube stuff just kind of on my own to provide more value to you. So I guess without further ado, let's get into the show, shall we? Good morning, all you beautiful monsters. For those of you just joining me, I'm your host, and this is my coffee for the day. Right there, I drank the Monster, and today we're going to dive into a little bit of story that's got a lot of drama, a little bit of intrigue, and frankly, might be more importance than half the stuff that you see on Netflix, at least. And we were talking about a good old-fashioned David versus Goliath type showdown in the financial world, and the star of the show is a metal that most people think is just for spoons and vampire bullets, or werewolf bullets, maybe. I don't know. We're talking about silver. Now, I know what you're thinking. Silver, that's kind of boring, right? And usually you'd be right. It's gold's less famous, kind of boring little brother. While everybody's been distracted by crypto getting flushed out since October, and the stock market's just wild mood swings since then too, silver has quietly been walking up to the biggest bully in the playground, looked him dead in the eye, called his bluff, and the bully blinked. The bully blinked. So picture this. Just a few weeks ago, a couple weeks ago, December 12th. I mean, we're almost 2 weeks ago. You're tucked in bed, you're dreaming of sugar plums or stock market gains, and over in New York, the digital halls of COMEX, that's the big casino where they trade futures contracts for things like gold and silver. The lights are on at 2 a.m. on a weekend. The supposedly neutral exchange decided to pull a fast one. They jacked up the margins on silver by 10%. Now, for everybody who doesn't speak Wall Street jargon, let me translate this a moment. Imagine you're in a high-stakes poker game. You're holding a great hand. You're all in. And suddenly, at 2 in the morning, the house walks over and says, "Oh, by the way, To stay in this hand, you're going to have to cough up 10% more cash on the table right now. What do you think happens? Well, most people can't cover. They're forced to fold. And that's exactly what COMEX was kind of counting on. This was a deliberate, desperate move to force a massive cascading sell-off to kind of crash the price of paper silver, kind of scare people away. They've pulled this trick before, back in 1980 and 2011, and it worked beautifully in the past. They crushed the price and walked away, but this time, this time's different. This is where the story gets interesting. In the minutes that followed 2 a.m. margin hike, a tidal wave of selling hit the market. 67 million ounces of paper silver dumped pretty quickly with that margin call increase. The price should have cratered. 67 million ounces of paper silver being dumped. Should have been a bloodbath. Instead, something else happened. A giant wall of buyers showed up, absorbed every single contract that was being sold. The price barely flinched. And then less than a week later, silver wasn't just recovering. It was at all-time highs above $66 an ounce. It just started the year, this year, under 30. I've told you it was going to be one of the biggest trades of the year. Now it's more than doubling. The COMEX, they tried to sink the ship, but all they did was prove how ridiculously seaworthy this ship really is. The paper market just got its bluff called by a physical silver market. And the saying goes, rock beats paper, or maybe it's metal beats paper in this case. So why did the bully's punch suddenly have no power? And more importantly, what's the opportunity in all of this? First off, the COMEX is like a bank that's been writing checks, and it's been a little ambitious on writing those checks. It's written checks that it can't cash, and it's been doing this for like 50 years. They sold claims on hundreds of ounces of silver. Think about this for a minute. For every 1 physical ounce of silver they actually have in the vault, they've sold contracts and claims for hundreds of ounces of silver. This is where the risk lies in SLV, because SLV relies on those COMEX contracts. The physical silver isn't there. SLV fails the audit. And now, people are starting to show up and ask for the real silver. Countries, big corporations, they don't want paper promises. They actually want the real physical metal. The vaults are actually at historically low rates of physical silver. Now, number 2 in the story here, the real world actually needs silver. This isn't just shiny rock or shiny metal. It's a critical industrial metal. The phone or laptop or computer you're watching this on, the solar panels powering our future, the electric cars that everybody talks about, even nuclear reactors, they all need silver to work. And when companies like Tesla or Samsung buy silver, they aren't storing it in a vault. They're melting it down, building it into products, selling it to people. That silver's gone. It's never coming back to the market. These industrial giants have standing orders. When the price dips, they don't panic, they buy like crazy. They know a discount when they see one. And this brings us to the investment angle here. For years, the COMEX has been able to suppress the price of silver with these paper games. Dump lots of paper, change the margin rates. We're finally starting to see what the real price of silver looks like when it's not being manipulated. So how do you play this? Physical silver. Buy some coins, buy some bars. It's one of the most direct ways to play. You hold it, you own it. There's no counterparty risk. You become the person calling the shots. And the downside, you're going to pay a premium over spot. But as we're seeing, spot price may be becoming less and less relevant on those paper contracts. And then you got mining stocks and ETFs. You know, if you don't want a pile of metal in your closet, you can Go after the companies that pull it out of the ground. Look at ETFs like SIL, the Global Silver ETF Miners ETF, SLVP, the iShares, that's BlackRock, MSCI Global Silver Miners ETF. And these are miners. When the price of silver goes up, the miners who are profitable at lower prices, they make a fortune. It's a leverage bet on silver price, but when it works out really nice. And if you want some paper silver that actually backed by audited real numbers, the Sprott funds, SPROTT, the Sprott, you have like iShares and you have Vanguards and you have, all these other managers of ETFs. Well, Sprott is a manager of ETF and they actually pass their audits. They actually have the silver in the vaults to back the paper that they have on the market. So if you want to still hold an ETF, look at the Sprott funds over SLV. SLV fails its audit. And what about the paper silver, the future contracts? Be careful there. It's a rigged casino. That's the one we've been talking about. The COMEX might be losing its power, but it's kind of like a cornered animal. It's still dangerous and unpredictable. They could try to limit the number of positions or even go into a liquidation only mode. For my money, I'd rather bet on physical reality than paper fantasy, but hey, we saw what happened on December 12th, and it wasn't just a weird trick in the market, it was a signal. It's a tremor from the collapse of a 50-year-old system of manipulation. The world is losing faith in this paper, money, fiat, false advertising junk that we can just create into oblivion, and they're turning back to real assets. Silver isn't just an inflation hedge anymore. It's the center of the supply crisis. And we're meeting industrial demand coming up quickly. Monetary demand, it's interesting. The historic ratio, like the ratio of physical silver in the Earth's crust is 15 to 1. 15 times more silver than there is gold. Now, if gold sat where it is and silver came up to the historical ratio, 15 to 1, we'd be at $300 an ounce on silver. 290, right in there. And that's without gold going up $1. That's just gold right at the current price. Silver being 1/15th. Do the math. Take the gold price, divide by 15. That would be the historical actual value of silver if all the reality came crushing down. 300 is a big, long way up from the 60, 70 area we find ourselves in silver right now. Now, I'm not saying we're going to go straight up. I'm not saying we're going to hit that level. Nothing ever goes straight up. We get pullbacks. But the long-term story here is pretty clear. The old gatekeepers kind of losing control. The bluff has been called. The demand is rising every day, it seems like, especially as we put more and more AI data centers and EVs on the road and nuclear plants. And so do your own research. Maybe, just maybe, it's time to pay a little more attention to this unloved corner of the market. Might be finally having a moment of repricing. So that's all for the monologue today there. And moving over. Jump in here. Let's see. Pop the chat back up where I can see it. All trading involves substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. I'm just a guy on the internet. I'm not professing to be the world's greatest trader or anything like that. I'm just a guy that figured out how to make money in the market. I want to teach some other people how to do that without all the effort. I mean, I spent like 20 years trying to figure it out. That was a long freaking time. I learned a lot of bull crap that doesn't matter to making money. So what I want to do is I want to show you some of the ways that actually make money, right? I thought for a long time, just need to learn more about these markets once I learn enough, I'm gonna make money. But it turned out that wasn't the truth at all. So much of what you hear every single day is just complete bullshit. You watch CNBC, you watch Fox, you watch CNN, whatever, you watch the comedy, financial comedy channel, and they just spout a bunch of crap that doesn't actually matter. They actually make up reasons. Like whoever's the first one to make up a reason for the market to move, everybody else spouts it. And then that's what everybody believes caused the market to move. It's kind of crazy. But it's the way the system works. So be careful out there. Most of it's complete smoke and mirrors. I have a few real things. The only two real truths in the market: price and volume. Price and volume. That's the only two truths in the market. How much something's how much I'm willing to sell it for, how much you're willing to buy it for, and how much of it we want to trade. That's the only two truths in the market. Everything else is smoke and mirrors. So be careful out there. Nobody's watching out for your money more than you are, but if you want somebody to try to help you, you can hire and consult a financial advisor. Be careful. Gold making a nice little pop, continuing its little run here. We are in danger land here. This is danger for coming back down. Be very, very careful. I thought I had a calculator up. Apparently I clicked close when I was moving the windows around. Now, right there, 44.90, so 4,500, right? The ratio of silver, 15 to 1. So 4,500 divided by 15, $300 an ounce right there for silver. If we were going to match the level of gold right here. So silver would be $300 an ounce. We're at 70. 300 is much greater than 70. A little over 4 times greater. That's crazy, right? The potential, like 428% higher. Just to come into the historic ratio, gold to silver. Absolute beast of an opportunity, potentially. Now, I thought the big move was this year, and I would be cautious jumping in a big way for next year. Like this year, everything was pretty clear to me. Coming into this year, I mentioned many times I thought this would be one of the biggest upside trades. It took us right into the last part of the year for it to actually get going. But the upside from here could be another 400%. This was already a pretty big freaking move. Already a pretty big move. So we'll look at the coming into the year here. Look at where we are right now. That's 132%. That was a pretty big move. But if we were to go 400% higher, so how could you take advantage of something like this? AGQ, you could buy a few shares. It is a little pricey, but this will go up 2 times. This is leveraged silver. And you don't have to buy any contracts. You don't have to have any time horizon here. If silver goes up 400%, this will go up 800%. This right here. That's where the bigger opportunity may lie. If you put a few bucks in, could turn into more than a few bucks. 8 times more bucks. It'd be pretty wild. 158. Yeah. 158 times 9. Talking 1,400 bucks here. That would be absolutely wild, wouldn't it? right there. Right in the vicinity of 1,400 bucks. I didn't even click it properly, so that'd be a wild ride. So there's an opportunity. Funny enough, AGQ sitting on the gainers list today. Platinum's also a big potential. Look at that, right to the target, 206. Coming up, PPLT. Next one up, 270. This is actually turning into a bullish chart here. If we hit this 270 level, even if we pause a little bit, PPLT going on a higher. Platinum itself probably going on up to new highs. New all-time high. $3,200 an ounce. Golly, look at this move. From just right back here, we were at $500 an ounce. Now we're looking at $3,200 an ounce for platinum. Platinum, another metal that is used in a lot of catalysts, a lot of catalytic converters and things like that. You know, this is a metal that doesn't really get used up, but it does get used and deployed, and it works as a catalyst in a lot of high value electronics or processes. They use it as a catalyst in like natural gas cracking to make hydrogen and all sorts of stuff like that. So, and then palladium, the unsung hero. This one could also break out pretty big. Another industrial metal, precious metal that we don't hear about very often. This one's about to break the 618 right here. If we do that, can we look at $4,100 an ounce on palladium? PALL. If you believe that palladium is on the breakout path, which might very well be. This would go from 166 to 364. PPLT, look at the bigger. Yeah, this one hadn't been around long enough, but we know that platinum was down here, so that high, this low. This one's already coming up to 224 area. 401, yeah, could be. You could see a little resistance there and then push it on up into that neighborhood, 400. So if anybody jumped on PPLT when I talked about it breaking through 100, that we were probably going to 170 at least. Now we're at 200. So good on you. Anybody bought AGQ back when I was talking about it early this year, coming into this year. Beautiful. We went from down here in the 30s coming into this year to 158, and it could go to 1,400. That's why I was saying this was probably one of the bigger opportunities coming into this year. So, absolutely wild. ES, let's take a look over here. Let's delete a few lines. This is starting to get a little ridiculous. We've got swings. We've got swings all over the place. And we're struggling a little bit here. Struggling. So we've got this high right here. That was the all-time high. And we had broken above this high, but we're still not back to all-time highs. We're struggling. As every time we poke a little bit higher, we struggle a little more. We didn't do the bigger pullback. We did a small pullback, and that doesn't give me confidence we're going higher from here. It was a little baby pullback. These arrows I drew on the chart back in November when we were making this low. Maybe it was back in November here when came down, came up, came down, came up. We haven't done the bigger pullback though. So this gives me. Let's do a vote. Let's do a vote. Let's see. Let's see what y'all think. Can the S&P 500 break 7,000 before the end of the year? We're at 69.35. 7,000's right here. Can we get up to that level before the end of the year? We're struggling, remember. We've been struggling in this area since we topped out in October. I'm just curious, like, what y'all think. I'm concerned a little bit about this price action here. Now, if we get higher than the all-time high, odds go up. We've only got like 54 points between the all-time high and 7,000. Well, 50 points roughly. Put it right on right at 50 points. You look at the cash index, it's a little bit, we got 80 points there. This is the one that matters. 77 points from the all-time high to the 7,000 level. This is still got lower highs coming across here. And it concerns me. Like, I am legitimately concerned that if we don't break higher here. So ES, the futures, broke higher than this. The cash index here is not. It's lower. So that creates a divergence between cash and futures. When there's a divergence between cash and futures, cash wins. Even though we got missing price action. I look at the futures for a more complete picture of what's going on, but when there's a divergence in the pathways between the cash index and the futures that trade 23 hours a day, 6 days a week, cash always holds the keys to the castle here. Now, they'll come back in agreement. How they do that is usually through a pullback. Usually they come into alignment through a nasty pullback. We could tag 7,000 and then do that nasty pullback. Now, another one that's got me concerned though. This one's a lot different story. This one's not screwing around right near the all-time high. This one's making lower highs all the way across here. We've got this high back here in October. Got this high right here in November. Got this high right here in December. And now we've got this current high right here. And that's not bullish right there. That's not like a progression of highs that look like we're about to break out. This is a progression of highs that looks like we're about to break down. And this is where all the strength has been in the market since since a long time, but 2020, almost the entirety of the gains, like 80% of the gains, 90% of the gains in the S&P has been in the top names in NASDAQ. And if the top names in NASDAQ pull back, what do you think is going to happen to S&P? So we're seeing some softness and rotation. We're seeing S&P show a little bit different story here. But NASDAQ indicating some problems. And the cash index here, even more dramatic. This thing might take another trip down. We could hold on to it for the next 6 days including today. We got 6 trading days left. We could hold on to this for 6 more days and start out the new year. And what's scary to me, that's a lot the same way we started out 2022. Even if we spike a new high here, it's very eerily similar to the way we ended 2021 and started 2022. Eerily similar. Russell here is still struggling like this. That could have been the high right there. Move down, 3-wave retrace. If we break down below this low right here, probably make another move down, at least as big as the first move down there. And that would put us somewhere in this 2465 area, probably between 2460 and 2490. If we got down to 2430 on Russell futures, this is futures for Russell, small caps, and we bounced here, held below this, and then went down again, that's setting us up for a bigger correction. So we've got some bigger correction potential sitting there in the indexes. I would use a little bit of caution. Oil coming into that 4-hour roadmap line, finding some resistance. We do have the downtrend of highs just above us up here, right at 59.20. If we pop up there and reject again, this is probably telling us we're going lower low into the new year on oil. The chart still looks like it needs lower low on oil, but that's kind of how it's shaping up. We may get another couple days of upside, but then opening the door for bigger downside. Gold, be careful. This may very well be a topping signal right here. If this candle turns red or closes red today, that's an indication we're going to get a bigger swing lower. The level to watch on the downside would be back down around 4100, 4150. If we come down and break through that, probably coming down here, the roadmap line down around 3800 on gold. Bitcoin, this is not looking good. If we break down below this low, we are probably going down in the 70 to 75 area. If we just touch lower like we did right here, okay, that's not horrible. But if we break down below these two, like if we get a plunge below and then it's below this and then we go below that. So this, lower than this is your warning. Lower than this is your first confirmation. Second confirmation, which makes this probably, I'm going to say upwards of like 85% likely to happen. Get continuation down in that 70, 75. It's not super far down there. So first warning sign, first confirmation, which is just, not very low, not very much lower. Second confirmation would be a continuation through here. And that sets up for a dip right down in here, 70 to 75. 75 would be the top end that I would expect, the low end down at 70. Just be careful, everybody. Ethereum looking kind of sketchy too. At a minimum, at this initial drop, this recovery, this would put, if we just get the continued 3-wave continuation, this would put Ethereum down in the 4, 4 down. I'm looking, just reading the last 3 numbers, down in the 2300 to 2500 area. So that'd be where I expect if we're going to get continuation lower. So break down below this level, probably going to get us down there on Ethereum. NKD. Now this is where it's really weird because this is pushing higher, global liquidity indicator. Although we haven't broken up higher than this prior high right here a couple weeks ago. If we do break higher, we expect to push out to new all-time highs, and it should take these things with it. Should take all these things higher with it, but if it doesn't, that'll be interesting. Dollar. Man, look at that. As gold pushed higher, dollar pushed down, new low, new local low. This is still set on that break below 98.5, still set to go down lower low than we had back in September. Apple pushing below that uptrend of lows. Watch out for the bigger flush here. Amazon holding on to that roadmap line so far. Coming up to the first resistance here. Next resistance zone right there for the bigger pullback. So similar to Bitcoin, but upside down. First warning, we're going higher. Second warning, first confirmation, we're going higher. Get above this. Pretty much the ultimate confirmation, we're going higher. And the upside target, 75% likely, 265 up there. Google successfully tested the 304, moving higher. 337 still the upside target. Meta, this would look best if it would just do one little pop right down here to that 630 level, and then we can find support there, bounce, and then I would be pretty convinced we're on the path to like the potential for 1300 on the upside for Meta. Microsoft still churning this area, nothing clear, but this set of lower highs right here, the potential for this to dip lower like Meta did is very elevated. So far, NVIDIA has held on to the roadmap line, has lower highs coming through here. If we don't break higher than that stuff, potential for this to pull back a little further. 150 is the breakout from from a year ago. It'd be funny if we ended up right down there and had gone basically nowhere for a year. Funny to me. Probably not funny if you're invested in NVIDIA without doing any cash flow. Tesla keeps trying to break out here. We do have the significant resistance right there. This high, this low. That was the 1448 and the 1272. It's a pretty significant resistance. May need to retrace just a little deeper back in here. And we did hit that first 1448, retraced in here, popped on up, came up just shy of that 1272. But a lot of times we'll see a little retrace or rest before we can pop the next level. Next level up there at 539 and then 550 on the bigger pullback that we did starting in December here and wrapping up like Liberation Day down here. So if we can actually get the move, 550 up there. We still, like, people are still buying calls like monsters on Tesla. So Netflix just sitting here. The potential for this to come down here is elevated since we can't seem to get off the floor. Basically laying on top of the supports. This was a big consolidation zone back here in 2024. We're sitting there on top of it. So basically this has done nothing. This one's done nothing for a year. So things that were moving, I go pull gainers. Things that were moving $2 or more up. There wasn't many things going up. I go pull decliners, things that were moving $2 or more down. And I hunt for opportunities. And then I've got setups. I've got like 14 of these today. So that may be where the gold is. And then I'll kind of give the bias for the day after that. So let's kind of jump through here. We already talked about that one and that one. ALB. Find a resistance at the top of this box. Watch for a pullback. If we can break on out, retest this zone from the top. That would set us up for the bigger upside potential on ALB. That bigger upside potential sitting up here around 600, 550, 600. Lots of gold stuff. NVO, getting a little bounce. Now remember, Trump passed an executive order and put 100% tariff on this company, whereas Lilly has manufacturing capacity. If you don't manufacture your drugs in the United States, you've got 100% tariffs on all the drugs you import that are made somewhere else. Lilly has manufacturing capacity here. That's why their chart is up and NVO's chart is down, even though they make this a drug that's kind of identical. And if you want to know more about that story, I have a video that I released about 2 weeks ago. You can watch right on here on the channel when we're done here. Let's look for 5 executive orders for 2026. I talked about 5 different executive orders. That's just one of the 5 that potentially has a big impact on 2026. Nuggets, be careful on that one. AEM, stalling out with a lower high. Watch out. We're due a pullback in those. SCCO, if we can get higher, 180 would be the next upside. NVS, Vardis, coming up, probably 145, 150. SIL. There's that Global X Silver Miners. Nice little pop. Lilly was a decliner, now we're turning back around. 1200, next upside. And this is the retrace I was talking about. Potential on Tesla after hitting the 1272. May see something like this. Retest the breakouts. And that sets us up for the next move higher. FJet. The other day, David, when you were asking me about FJet, I don't follow IPOs, so I don't really have much to say about this one either. That's so far a somewhat corrective pattern. May come all the way back down to a lower low below 6. I tend to wait till these have some roadmap lines, so that takes at least 169 days to get one little blip of roadmap line. It's 169 trading days, so that's at least 7 months or 8 months of trading before I get any indication of where this might go. So 4 daily candles doesn't give me much information. Light has been a beast, and the beast can continue, but this is probably due a very large pullback. Very large pullback. We are well over 3 standard deviations, and we've been well over 3 standard deviations since August. It's going to get a large pullback. This is not Bollinger Band. This is 3 standard deviations off my roadmap line. CLS, probably going to retrace back to the roadmap line. Light. Yeah, when the correction happens, it's going to be vicious on light. Although, this company's not bad. I mean, look, even at this level, their price to sales is only 15. So it's not even that crazy. Their price to earnings is a little crazy, but their price to sales is not crazy. They do have high debt, though, and it's growing. So any hiccups in the revenue train can cause some problems here. ASTS, all these space things are probably going to pop out. Like this one's due for a pop up here, 114. I saw Rocket Lab on there, I thought. Yeah, Rocket Lab. Looking for this to hit 81. We got really freaking close this morning. My alert's missing. I wonder if it hit. Look for this to pop that level. I actually have a 70-80 spread on this thing. Probably looking pretty good. Let's see. See if I can find it. Yeah, here it is. Up 133%. It was 150 yesterday, I think. So a little bit of pullback there on Rocket Lab. I'd like to see that come on up a little bit. SanDisk, potential comeback. A-Lab. Potential for this to bounce, get back up through 201, and then set up the target up here at 287. Coinbase, hunting a low. We had this big spike down here, 231. We may need to go lower low, 225. COHR, yeah, it's a little elevated. Might get a retrace. NBIS, looking for the bounce here. Break back through 112, 156 on the upside. That's leverage Robinhood. Oracle still trying to confirm that this retest over here is the bottom. That's a 618 retrace. If we can bounce, get through the roadmap line, bigger upside potential. VRT holding the roadmap line so far. Circle, little retrace would be expected. Then pop higher. MSTR, about to take that whole, about to wreck a bunch of people that jumped on this candle. And it's hanging baby or whatever they call it. About to make a lower low, wreck a bunch of people that got long there. Hood, I've been warning, has the potential to get one more flush, right back down in the zone. That would just match the correction we did earlier in the year after we got this very lofty upside target at 153. CRDO, hunting for support at the roadmap line, hadn't touched it yet. Duolingo still has some downside to go here. Wait for that to come on down to 140. PLTU, 2x leverage on PLTR. PLTR, 218 is the upside target there, and 130 is the downside risk. We don't get the continuation up. So things with a setup for today is these are daily chart setups with my signature roadmap bounce. If you're not familiar with this pattern, check out the video pinned to the homepage. Click on the logo down under here on the computer, or if you're on a phone, click on my channel name there, and go to the homepage of the channel. Watch that video. I give you the code for the roadmap line for free. But if you're somebody that's like, I'm not putting in code, I don't know how to code, I don't know how to do that. That's cool. Check out the description. Links in the description. $5 get you the roadmap line. Now, essentially, it's a trend. We have an uptrend here. We get a pullback that bounces off the roadmap line. When we get a candle close above the 618, it triggers this high likelihood pattern right here. 75% likely to hit this 1448. 75%. Now this works on all time frames, all tickers. 75% likely right there. Once we get above the 618, then we're going to hit this 1448. 1448 is, you take the 1272 right here, which is 70% likely to get hit. You multiply by 0.9, so 90% of the way to the 1272, and you get 1.1448. Now that's not in my video that's pinned to the channel. This is a new level I added more recently to up the win rate from 70 to 75%. And I've done hundreds of thousands of back tests, hundreds of thousands of back tested trades to prove this 75%. It's like 74.89% or something like that, but essentially rounds to 75% of the time. We're going to see the price come up here, and the stop is always $1 below the low. So on lower price stuff, it's a bigger stop than on higher price stuff. Higher price stuff, $1 is like 1%. Lower price stuff, $1 is like 10%. So just keep it in mind when you play. Upside target here, 1950. There's the entry, 1950 target. This one doesn't have a statistical population, so this particular ticker doesn't have any bias. You need 30 trades in the history for these numbers to really mean something for this particular ticker. Only has 12, so you just follow back on the historical results. R mark, that's not actually a setup. That one's not either. The Python bot I have is a little more aggressive. It picked up this high and this low. But when you look at it, I don't want to miss any, so I use Python to very aggressively find these. And then when I look at them on the computer, this one took too long. This got, the reason this algorithm didn't fire off one of these entries right here in TradingView is that this pullback took way too long. So Python was like, looks reasonable. I don't want to miss any, but right here, this took way too long, so it's more likely to fail with another pullback. When they take a long time to do this bounce, a lot of times they're in a correction. When they bounce quickly, many times they're still in trend. Trend, pullback, continuation. 139.50 on this one. 23 trades, 89.2. So this is running pretty nice. 7 trades shy of a statistical population. And at 7 bad trades, still this would probably be above 75%. So still running pretty good. Profit factor 2, that's pretty nice too. So this one may work out. 139.50 target up here. Now the average trade lasts 45 candles. Remember, candles don't get made on the weekends, so it's not. 45 is not calendar days. 45 is trading days. And the standard deviation is that on this is 35. And if you want to cover the 99 percentile, you got to multiply by 3 and get 3 sigma, 3 standard deviations. So that gets you roughly, I'm rounding off to 150 candles, which equals 7 months of time if you don't want to run out of time on one of these setups. So this could take 7 months for the 90, to cover 99%. Now, half of them take 45 days or less. But the other half, 49% of them, of the other half, can take up to 7 months. And that leaves 1% that can go longer, indefinitely long. It's that long tail thing when you know anything about statistics. It's that long tail over here, greater than 1%, or can take longer than 1%. EG, coming up in here. Probably going to bounce down. I don't like that setup. Here's a good one. Here's the high. Here's the low. Entry 50.49. Target MSCI. Talked about MSCI on the silver market there. There's the high. There's the low. This has been really choppy, but it's been hitting. This one's already in it from back here, looking for another pop. This algorithm. Looking for that 60 target up there. 600 target up there. MSM. And very choppy. And I would wait for the bigger move up above this level for 95 target. PKG. I'd wait for the bigger move up above that 200 level, 210 level to get the 224 target. RDY. Why would I show bad ones? Because it's an example of what not to trade. This one's reasonable, but it's already in it from back here. So this one took the trade from back here, this high, this low. It didn't stop out, didn't go a dollar below the low, and it actually didn't grab that high. It grabbed, which high did it grab? That one. That high. That little pullback, 1530 target. Didn't go a dollar below the low. 1540 still the target. And last but not least, Williams-Sonoma. Yeah. I don't like the choppiness here. I wouldn't touch that. So not a lot of great stuff in here. Be careful out there. Bias for the day. I'm cautious here. I have to say. Let's see what we thought on. Looks like we're about 50-50 on the poll. 55, 45. 55 yes, optimistic people. 45 no. We'll see. We'll see, everybody. We'll put alert here. And one of my on the S&P 500 itself right here. This is the one that counts. Can we actually get above? Right there. This is the cash index. That's the one that counts. We shall see, everybody. Right now, this is a downtrend. Be careful. If we don't break higher, the downtrend's intact, and we have to break the downtrend to go higher. If right now this is a downtrend intact, and this can result in more chop in the next couple of days here. Chop us up. 6 trading days left. No. Rocket Lab. The price pattern is good for 81. Like we're gonna hit like 75% likelihood we're gonna hit that 81.66. That's what I'm looking for right there. It's the price pattern. I wouldn't have done it if I didn't expect it to hit that. Retrace into the breakout. Doesn't matter to me one bit. We retrace the breakouts, push on up. It may even go on up here. Then doesn't concern me, but I'm gonna be out. Like this is my target, and when we tag that, I'm out. I'm not screwing around for higher prices. So what happens after we hit that target? More often than not, retrace to the roadmap line on the daily chart, which is all the way back down right here. So that's like a 50% pullback, so be careful. I'll do a request show at 5 p.m. today. Just a reminder right here on YouTube. Come back, hang out with me 5 p.m. Eastern. I'll do requests for at least 30 minutes. And I'll be on Market Masters by myself, I guess, again at 11:30. My man Jack had an accident, so I'm a co-host. Have a great day, everybody. We'll see you again tomorrow. Same bad time, same bad channel. I'll be live again Christmas Eve. Half day tomorrow. Be careful.